Hello, today is Tuesday, March 11th, 2008. This is Brian Shannon from alphatrends.net. We had a big update here in the market today thanks to Bernanke and his pals at the Federal Reserve. They came in and added liquidity to the market, and that was greeted with some aggressive short covering in here today. The trend is still lower, but that doesn't take away from the fact that we had a 3.5% gain today, and if you were fighting the trend by selling short, you were obviously wrong here today. The market gapped up and came, close to that declining 5-day moving average, and also near this level that had been support recently, near the 131 level, and was resistance actually late last Friday as well. It came up to that 131 level, found some selling, pulled back down, and then as it retested and recaptured later on in the day, here in the afternoon, that daily VWAP, that is the volume-weighted average price, you see that it had a real nice rally, just stair-stepping higher highs and higher lows. And that's when the buyers regain control of the short-term trend on the daily time frame. And now we've got this market that looks like maybe it's going to head up towards, maybe the 135 level. We've still got other levels of potential resistance that'll get in the way, but that looks like a pretty obvious area on this 10-minute time frame. We've got to back our analysis up, actually. Let's take a look at the 30-minute time frame. You can see here that this 134 area is the next likely level. 133 had been important as well, so there's just going to be, if this market is turning around, and it looks like it has for the short term, let's see how long it can hold on to its gains. The best level of important support is pretty far away right now, down near the lows for the day, and that was down near about 129 or so. That's going to be important going forward over the next few weeks, I would think. 129. What I'd like to see, maybe a pullback down towards that 131. Seems as though the market got a little bit ahead of itself here late in the day. A pullback towards 131 would allow that area to now act as support near that 5-day moving average, and then maybe you could begin to trade more on the long side. But again, I'm going to repeat myself to say that it's more of a day trader's environment in here. There's going to continue to be a lot of volatility. There's a lot of news headlines that are going to continue to affect trading, whether they're from the Fed, whether they're from Charlie Gasparino, or who knows, whatever it is out there, specific to a company. This market psychology is still very fragile, and you can see that by the rapid moves in either direction, that people just don't have much conviction in this market, and when they all get lean in one way, they scramble to go the other way. It results in large volatility, and that's what we're seeing. So the spiders, the average price on the SPY since the Federal Reserve has cut rates, that 75 basis points, and that's where we saw the January lows established, is right around 134. I expect that should probably be a heavily contested level if this market can't continue to rally, so keep your eyes on that level. The XLF today was up 6.8%, so this group, was getting sold off the most. It came down and established lower lows first in these sectors that we look at, and it pierced at the deepest. But today we had the most powerful rally, and right now, of the groups, that is, and right now it's only gotten up to a declining 10-day moving average. As impressive as 6.8% sounds, it's done nothing to change the fact that we're in a primary downtrend. And for now, you've just got to treat this as a bounce within a downtrend. It may continue to bleed out for a couple days, but we'll see if this market can, get up towards this level, $26 level. That was actually $26.20, if you remember, from when it broke down. That's where the important support was broken that led to this larger sell-off. So 26.20 ought to find some resistance in there. If we take a look at the average price that this market has traded at since the January lows, we'll take a look at the volume-weighted average price here, and that is up at about $26.70. So still a lot of work to be done in the XLF and all these markets. What I think would be the best area, and by the way, this is the level that I had mentioned going back to last Friday even, that if the market was able to get above this level, that's where a rally may ensue. And right now, if you waited to get it for it to get above there, then it wasn't such a great trade. That's why you have to combine multiple time frames and see that when the buyers took control on the 1 minute time frame and were able to hold on to that control, it broke past some resistance, broke past that VWAP, and then established this pattern of higher highs and higher lows. That's where you want to be getting involved in there to, you use the shorter term time frame to get a more accurate entry if you're looking for continued upside. So this market, what I'd like to see would be a pullback down towards just, under that $25 level, low volume pullback towards that area, and then establish a little bit of support, and then surge to higher highs and higher lows. And maybe we could get a 3 or 4 day rally to hold on in here. But again, that $26.20 level or so is going to be the likely area where we would expect to encounter some selling. So it doesn't mean that just because it was support, it will become resistance. Support once broken tends to act as resistance, and it gives us some way of looking at the market with some structure and some price targets and that sort of thing. But again, don't take support, resistance, cups and handles, whatever, any technical stuff too seriously. You have to look at it and combine it all together to get where the best odds are in a particular setup. The NASDAQ 100 also finished with a big gain here, 4.3%, but you can still see, and this market, did make a lower low yesterday, a new closing low and a new intraday low. It pierced those January lows, so I don't know if that has anything to do with the timing of the Fed's decisions, but I'll leave that for the conspiracy theorists. You can see here, though, that in the bigger context, today is just a little blip, similar to the moves we saw over in here. We saw some big gains over in here too, but then the market broke back down. We've still got a rapidly declining 10, 20, and 50-day moving average. We're still below the 10. The 10 is below the 20. The 20 is below the 50, etc., etc. The biggest level of resistance here, and I don't know why I said the Qs, but the IWM is 68, obviously, and the market's rapidly approaching up towards that 68 level. So 68 looms very large because that had been support for several weeks. If the market can get back above 68 and hold above there for a couple days, then there's the possibility that maybe this could turn into something more, the market could turn more neutral. And that's just one of the steps along the way towards a bottoming process. You've got to be able to crawl before you can walk, before you can run. And the markets don't turn around all at once. They have to neutralize, and then the buyers have to slowly take control. But again, you don't get too excited about one day's activity. The resistance at this 66.60 level was broken, and that's about where we find that 5-day moving average as well. Hopefully we'll get a pullback, and then we can start to establish higher highs and higher lows. I'll just show you the 1 minute time frame in here again as well on that IWM. That's where the buyers really took control and gained control and stuck it to the short sellers hard. They said that basically, we've got control today, and you're going to have to pay up big time if you want out. That is, get out of your short positions. The Qs, the NASDAQ was actually up 3.8%. It was the IWM that I was just mentioning that was up 4.3%. So here again, it's just a blip. This market made the lower low yesterday, closed at a new low as well, but rallied up to the declining 10-day moving average. And in here, we've still got all kinds of potential resistance levels. We've got, we did break this downtrend line here on a 30-minute time frame. And we've got this prior level of support was broken in here, and that this prior support that then acted as resistance. Let me just do this. Let me change this to 20 days or so. You can see that the next potential target maybe up near that 43.50 level. But again, I really would prefer to see it pull back deeper, not even towards these lows here that were important, this 42.75 level, but I'd like to see it pull back down towards that 5-day moving average. A pull back down towards that level would provide, I think, a good entry for a high, still high risk because the primary trend is lower, but for a good aggressive trade if you can be disciplined about managing risk.